Let's get in the trenches with my favorite, Scott. I got to say, gold and silver. Want to start with gold. Now, the big thing for gold is physical buying, especially from price-sensitive countries like China. So you have to wonder if last week's 4% sell-off is now leading to some strong physical buying. How are you trading the GLD?
Well, GLD, we've talked about investing in gold and staying with it. It hasn't been as violent and crazy as some of the other commodities. Gold right now is having an oversold bounce. If you bought it into the craziness last week, this is the level I'm watching on the GLD. GLD, came into support, didn't even get down to the moving average, so it's acting better than some of the others. Nice 3-day bounce opening up today. I would say, honestly, if you're trading this, you sell this up open and take this snapback and then wait for another pattern. I think this is your snapback, and then gold has a lot to prove with some of these other commodities as well.
I was going to say, how long do those oversold bounces tend to last? I mean, it's been 2.5 days now, so I have to wonder how much juice is really left.
Well, there's the easy part, and then there's the hard part. The easy bounce is the stretched snapback, which we're seeing from the past 3 days, and then if it could hold that snapback and hold sideways, then it can continue. But if you want to take that trade, I think there's nothing wrong with selling your gold if you bought into late last week, as well as some of the other ones like we'll talk about with silver.
Yeah, and before we get to silver, I just want to say that I have been talking to some traders who are worried about margin hikes on gold. Now, gold is a much more liquid environment, so but so supposedly is oil, and as we saw today, it had a 25% margin hike. So if that hits gold like it hit silver last week, whole different game changer for sure. I mean, right now, if you look at it, it's over $6,000 to buy a 100-ounce contract of gold, and over $21,000 to buy 5,000 ounces of silver contract.
Wow, so that's something to look forward to. Actually, I'm glad you said that.
Not
look forward to, or put your ears to the wall to see if you hear that. If you hear that, you might have to, sell your gold, get short, and ask questions later, and then figure it out. But that's something to definitely watch out for.
Because there's no news before those kind of hikes hit. Okay, let's go to silver, because what I'm hearing, Scott, is that a lot of the analysts are looking for more downside. We're really surprised that $36 level attracted all those trades. What are you saying?
It was just very, very oversold. It was so violent, from 49 down to 35. Even if fundamentally it's going to go lower, you have to get the bounce there. Now we're in the process of that 3rd-day bounce. So if you look at SLV, I'm long some of my virtual trading floor. I'm probably going to sell into this open just because I like to take the quick trade. Here's 1, 2, 3 days. You get this gap fill. You have the 50-day. Here is resistance. I call this resistance 1 at 38. But what I just want to throw out there is that just be a little cautious. I think a lot of traders are going to come in foaming at the mouth to short this up open because it's that easy. It could work, but if it doesn't, there's resistance 2, which I do see up here around this 39 area, which would also still be an area to short that can continue lower. So this is just not even a third of this big correction. So just be careful if you're just trying to blindly short silver because you think it's going lower because of the just the huge nature and violence that we saw in this down
Right,
move.
and the easy long, you missed it, right? Real quick.
The easy part of the long, but it doesn't mean if it all of a sudden opens up, pulls in a little bit, goes sideways, that it can't continue and just have a better entry than just buying the